Well, greetings everyone. Welcome to the Apptrepreneur Show. This is your daily dose of gig news, stock discussions, streaming wars, and sometimes a little bit of fun like Disney, although there's not going to be any talk of Disney today. All right, awesome. And everything is set up perfectly. So, for those of you who have never seen the Apptrepreneur Show and you want to know what is it about, it is a show where I, the Apptrepreneur, Kevin, pick a slew of topics to discuss within an hour or so. And you get to join me as we discuss the topics. Now, during the show, there might be a little interaction with the members in the chat. We always encourage chatting. However, if I don't get you in the chat, don't worry, because at the end of each show, we like to answer questions and discuss concerns you might have. And so that remains true. So if you have anything to say, anything you want to comment, do not hesitate, but feel free to ask in the live chat. And they will be addressed either during or after the show. But with that out of the way, let's talk about our first main topic. And our first main topic involves a company that we frankly don't talk about much on this channel, but we really should have been, because Hertz cars has actually been very important for gig workers. Hertz set up deals with, I believe, Lyft and I think at one point Uber to rent their cars for rideshare. Now, Hertz has filed for Chapter 11 bankruptcy. I believe it was Chapter 11, which is basically restructuring. They are hoping to restructure their debt and to come out of bankruptcy and still continue operating. Now then, here's the thing. When you file for Chapter 11 bankruptcy, unlike what most people think, it is not a get out of jail free card. It is a stay of execution. You have to go, you don't pay your debts for the time being and you hold off on the interest, but you have to prove to a judge that your company could survive a restructuring. Like, hey, if we pay off the debts and you restructure the company, could you realistically not only survive, but actually thrive? That is the big question. The courts basically have to decide at one point whether or not the company is worth more dead and sold off into pieces than it is alive. Well, that's why a lot of companies never emerge from Chapter 11. However, one thing that did happen during this bankruptcy, if you can believe it or not, is that the Hertz stock went up. And I've been seeing, because I know a lot of friends of mine and some people who are not friends and then people who I'm indifferent about getting into Robinhood stock trading. Now, I have been buying and selling stocks for a long time, and I would never, ever call myself an expert. But I have watched videos where some people looked at the stock with Hertz being what it is and saying that, hey, it's a risk, but it's got a huge reward potential. And to be honest, I even bought a little bit of Hertz stock just in case. I saw that it was going up for some reason. I bought 15 shares. And I personally, whenever I buy something on Robinhood, I never tell people you should buy this. I always say this is what I'm buying and here's why I'm going to buy it, but do not take what I say as financial advice. But with the way the stock was climbing, a lot of YouTubers were actually saying you should buy this stock. And if you are one of the people who are buying a lot of Hertz stock or planning to buy Hertz stock because you're hoping for a huge reward, I've got some bad news for you. You are likely to lose, and you are likely to lose big. So much so that I have, in fact, officially sold my Hertz stock. I will show you how much money I lost on it in a moment. But here's one of the headlines from CNBC. Hertz says it expects stockholders to lose all their money in filing for selling more stock. So what's going on? Well, here's what's going on. Hertz Global Holdings warned potential buyers in its common stock offering that it's almost certain that the equity will become worthless. Hertz said in a government filing Monday that it would sell up to $500 million in common stock. In that very same filing, the company said that those shares won't be worth anything unless those with higher priority in the bankruptcy, such as the company's debt holders, are paid in full, and that the company said would only happen if there is an astonishing change in the progress of the C virus and a significant turnaround in travel trends. Basically, this is a no-win situation for you. Now, what does this exactly mean? Well, first of all, why are they issuing up to $500 in common stock? What does that mean? Well, it basically means that they are printing more shares of stock, and they are going to sell more shares of the company. And when they do this, they raise money. But here's the bad thing on what happens when that happens. When that happens, the stock becomes diluted because there's more shares of it, so therefore the value goes down. In that same filing, the company said those shares won't be worth anything unless those with higher priority in a bankruptcy, such as the company's debt holders, are paid in full. Basically, that stock ain't changing the value unless the debt holders are paid and the company starts getting into a more healthy state. And of course, the company said it would only happen if there was an astonishing change in the progress of the C virus and a significant turnaround in travel trends. Now, I do believe there will be a turnaround in travel trends. I think, for better or worse, the lockdown is over. People are definitely done with staying inside. They want to go outside again. I've been surprised at some of the strip malls that I have driven past and seeing how absolutely packed they were. And hey, Disneyland is opening again tomorrow. Maybe today if you're watching the replay of this video as opposed to the live stream. So there is a chance that thing would happen. But whenever a company starts issuing more shares of stock to sell, be wary. One company that I invested in that did that quite a bit was MoviePass. And I was pretty oblivious to the dangers of what Helios and Matheson were doing. Because I thought, okay, they're issuing more stocks, they're going to raise more money, that should make the company stronger, but it really didn't in the eyes of the shareholders, because it just meant that it was basically like printing money. I mean, some people like to think that we could just print money and pay off all our debts, but the problem is, once you start printing money and you start giving it away, it effectively becomes worthless. Let's even simplify it a little bit more. Pokemon trading cards. Because, for better or worse, a lot of you watching this, especially if you were my age when the Pokemon, or you were, 14 or, 8 to 14 when the Pokemon craze started 20 years ago, you might remember the Charizard card. And the Charizard card was a rare card in the game that if you got that card, you effectively got your lunch money returned 300 times over, because you could sell that card for up to $500 if it was in mint condition. And the reason you could sell for that much money was a couple reasons. First of all, it was a very popular character, but also the holographic Charizard card was very rare. They didn't make many of them. So if you got it, it was worth a heck of a lot of money. Now, let's compare that to the Charmander card, which was not holographic and actually very common. In fact, you were almost certain to get it if you bought at least 3 packs of cards. Thing was worthless. People paid a nickel for it. And to this day, the Charizard card is still worth more because there's simply less of them, whereas the Charmander card is very cheap to buy because there's plenty of them. Now, that's kind of a very similar thing with stocks. The more stocks there are, the less value they have inherently. Especially since, it's not as difficult to get more shares of stock. So, this is really bad news if you are... Now, if you bought Hertz stock when it was 80 cents, and then you sold it when it was around $5, yeah, you made out like a bandit. But the Hertz stock, and let's just look it up right now, definitely took a beating this week. It's down to $1.88. So you go to the week, and look, this is where it started going way up. Actually, where was it? At one point it was $5. Yeah, here it is. June 8th. Yeah, June 8th was when it hit its height. Unfortunately, this was also when I bought it. And it looked like it was just going up, up, up. It looked like it would recover, and now it's heading down to, before poverty. Now, I will admit, if this gets below $1, I might not mind putting $50 towards it just to see what happens. But when it gets this low, you're pretty much in for trouble. No one's recommending you buy it, although a lot of people are recommending you hold it. I didn't hold it. I sold it today, and I lost $38.91 on this stock. Sold it for $29.18. Not great. Still, for the most part, it's the first stock I've sold since, June. Not June. It's June now. It's May 11th when I sold this stock and lost $12.67, and then it wasn't only last March that I sell another stock and I lost $17. So my wins are still much higher than my losses. Although I will say, just for the record, this Nikola stock has become like a weight. It just really sank, and I'm definitely concerned about this. I have it set to sell at $55, and if that happens, I will definitely lose money on it. But we'll see. Hopefully it'll go back up again. Like, this is the problem with stocks. It's not a rocket science. You don't know what's going to go up and you don't know what's going to go down. But the main point is that Hertz is almost certain to go to zero. And that even begs the question, like, why did it rally in the first place? Because, as this article points out, a bankrupt company, by definition, does not have enough assets to meet its debt obligations. Since debt is a senior claim, a bankrupt company's shareholders have zero value. Defying this logic, Hertz stock price rallied from 40 cents per share right after its bankruptcy filing on May 22nd to $6.25 on June 8th, a whopping gain of 14,000% in a matter of days. The stock price has since come down in the range of $2 to $3 per share, still far above the theoretical value of zero. But the bankruptcy judge's decision to allow the company to sell the equity in the public market makes the entire episode even more interesting. If the company is truly headed towards zero, why will any rational investor buy shares? Now, they do mention that Robinhood traders might be responsible for the irrational pricing. And this is going to lead into the next topic, of course, because the next topic will deal with this a little bit more. But ultimately, here's what's going on. Let's see. Where was that? Geez, I can't believe I lost this. So I lost my track. I'm sorry, folks. I'm sorry. I'm just gonna cut that part out because I don't know where I was going with that. So, sorry. There you go. So, yeah. So anyway, here's a bottom line. There's a lot of reasons the stock went up, and there's plenty of reasons why it went down. If there's in fact something to really take away from this, and this is if you're an Uber driver, this might be of real true value to you. But for sharing your because of the I hate it when that happens. Because of the bankruptcy, Hertz is selling rental cars for cheap. Extremely cheap, in fact. So, let's see here. Where can you buy? I was looking at the website earlier with the and there was like 2019 cars that were like less than $10,000 and had 30,000 miles on it. So if you're an Uber driver, you might want to do some research and find out where Hertz is selling these, discounted cars. And it could either be like a backup car, or heck, you know what? If you're doing Uber full time and making $1,000 to $2,000 a week, that would probably pay off that new car pretty quickly. So anyway, that's where we're going to leave this one. Sorry that I kind of fudged on the middle part a little bit, but I would like to know what you think of the stock. Do you have any Hertz stock? And if so, what are you going to do with it? Are you going to hold on to it, hoping that it eventually comes out of the gutter, or are you going to sell it, cut your losses, and just move on? I would love to know. Comment below, like, favorite, share, subscribe. Oh, hey, Jim, how you doing? It's the credit card, and that's going to be the third topic. But, one second. with that out of the way, let's talk about our second topic, which really is an extension of the first topic. And I think it's something that, as a YouTuber who is starting to talk more and more about investing and his own personal stock portfolio, I think this story is especially relevant. Because I make it very, very clear when I talk about Robinhood and what I'm investing in, I am not saying you should invest in what I invest. And I am not arrogant enough to say that I have stock advice. In fact, frankly, I think analysts are full of it when they say, oh, we know where this is going. Everyone's got theories, but you never know what's going to happen. Analysts could not have predicted a complete shutdown of the world, which would almost destroy the stock market, but now it's roaring back to life because, it eventually gets cheap enough that anyone gets into it. But there's at least one billionaire investor, Leon Cooperman, who warns that the rise of Robinhood traders will end in tears. And, well, just to let you know right now, there have been a few tears shed on this end as well, but let's look at what he's saying. So, amateur investors have been piling in money into different stocks and taking advantage of the market crash over recent weeks, but billionaire investor Leon Cooperman has rebuked these gains and believes it will, quote, end in tears. Leon Cooperman, who is chairman and chief executive of Omega Advisors, told CNBC's halftime report on Monday, they are just doing stupid things, and in my opinion, this will end in tears. The famed investor referred to online trading platform Robinhood's surge in account openings with more than 3 million new accounts created this year. Robinhood now has more than 13 million users, and if you're not one of them, use the referral link below, you can get a free stock, with an average user age of 31. Cooperman noted that many new investors are replacing gambling and sports betting with trading, telling CNBC the gambling casinos are closed and the Federal Reserve is promising you free money for the next 2 years, so let them speculate. He added, let them buy and trade. From my experience, this kind of stuff will end in tears. Now, here's the thing. He does not highlight anything on why he feels this will end in tears. But I think there's a few things you could point out. First of all, obviously, a lot of YouTubers, like, look up Hertz stock in YouTube as an experiment and see how many YouTubers were talking about how Hertz was a risky but potentially very rewarding scenario. And maybe it'll still be rewarding, but look, it's not heading in that direction. I also know that one of the most popular stocks that were bought on Robinhood last year, or maybe it was the year before, I forget, was MoviePass. Clearly that didn't go anywhere. And I know that people who get on Robinhood tend to do, a lot of them do this. They look for penny stocks. And they buy a bunch of penny stocks. And they hope that the penny stocks will eventually become dollar stocks. And so that they can sell it and get some lunch money. But this is not the best way to invest. And even though I'm not giving you financial advice, the best way to invest, in my opinion, is diversity, a little bit of a time, and take a fair amount of risk, but also invest in companies that are most likely not going anywhere. Now, I have a separate stock portfolio, and I might show you what that portfolio looks like at some point, although I think some things should remain private, but it's very healthy. But when you look at what I've been doing, I've been, with the exception of this one, which is definitely a risk, like this is Coca-Cola. Coca-Cola is unlikely to go anywhere. This is AMC Theaters. That's a risk, but I personally think theaters will be okay in the long run. This is another risk. This is Virgin Galactic. However, you click on it and you'll see that it's less than 5%. For the most part, I think you should only have up to 5% of your portfolio of one particular company. You have IMAX, you have GE, you have Nokia, you have JetBlue. These are companies that are unlikely to go anywhere. And like Papa John's isn't going anywhere. Six Flags is unlikely to go anywhere. These were experimental stocks, but I got them really cheap. And now they have risen in value quite a bit from what I bought them. And again, less than 5%. So if it gets wiped out, it will hurt, but it won't hurt much. And these are airlines who are obviously down, but here's the thing. Airlines will bounce back at some point. But I will say, oh, that's the wrong one, that I also resent a little bit of this guy's saltiness, because it really bothers me when people with money come forward and they say, we're the smart people in the room, and you don't know what you're doing. And I think he's a little salty at Robinhood traders, because there is a story that I covered last week that involved Robinhood users and how they were making bank on Robinhood. There were tons of my own viewers that, hey, when Uber stock got to like $7 a share, some of my viewers, they like bought $300 of Uber shares, and now that stock is like $36. Now, if you had bought it at IPO, you're still frankly a fool. It went down, you lost a lot of money. But if you bought it at $7 a share and it went up to $35, you made a really good decision there. And that's just the way it worked. A lot of companies, the stocks got much cheaper. I myself took out $1,000 and bought multiple shares of Disney when it hit $90, because I knew Disney would recover at some point. And while billionaires were pulling their money out, regular people on apps like Robinhood and Webull put money in, and they are now reaping the rewards. And I think this guy personally is just a little salty about that. He's like, no, the market was not supposed to recover this way. It was supposed to like take months, and I think he's just being a little salty. And for that matter, his narrative isn't even completely true. Oh, great. I could see this article earlier. But anyway, this article, what it was, and this is just one of the negative things about being live when things like that happen. That article was talking about whether or not Robinhood users were responsible for the V-shaped recovery. And while they admit that Robinhood users are buying a lot of stock, most of them don't have the kind of money that this guy has, or Warren Buffett. They put $50 in here and there, but they're not like putting all of their chips on red. They're just not. So the story that Robinhood alone is causing the markets to rise is a fallacy. And what this guy is trying to say at one point is that basically because all the regular people are putting money into Robinhood, then eventually the thing will collapse. Well, that doesn't even add up itself, because if regular people are buying stocks and more people keep signing up for Robinhood, that means they're just going to prop the market up more. Now, are some Robinhood people doing stupid things with their money? Of course they are. Of course they are. Again, I refer to our earlier story about Hertz. And I myself bought a lot of stock in Robinhood, which I want to remind everyone, this was my Robinhood investment, and as you can see, I lost big time on that. I lost big time on that bet. And look, it's still questionable. I mean, look, this is over a few months. It's typically going up, but I'm having a bad day now. So, sorry. I need to move this over here. See, this was our Robinhood days. This was where I lost. I was doing pretty good, but now I'm having a bad day. So, here's the thing. I don't believe Robinhood is causing the market to go way up. I think it's going up because Robinhood users and investors who see an opportunity to get certain stocks at basically half off are taking advantage of it. And of course, people are going back out into the public. They're spending their money again, and that raises confidence on the stock market. So that is why I believe this is rebound in the way it has. Because people are more confident in the market in general. Therefore, investors of all kinds are more confident in the market. So that's what's going on. But anyway, I would like to know what you have to say about this. Do you agree with this guy that Robinhood users are in for a huge wake-up call? Do you agree with that? Do you not? I'd love to know. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. And before we move on to the third topic, I do want to remind everyone that, look, I see there's 22 people watching. Thank you so much for joining and watching. First of all, if you like what's going on so far, please consider giving the video a thumbs up. But more importantly, if you have any comments or questions, feel free to leave them in the live chat. We will be getting to them after the episode is over, or the show, I should say. But with that said, let us get on to the third topic. And Jim, you're going to like this one because the third topic involves Uber's credit card. Now, one of the things that Uber was getting ready to do, Uber's trying to diversify their business. And hey, it makes sense, especially with rideshare being in the gutter. You know, rideshare's in the gutter, and I'm still a little suspicious if rideshare will truly bounce back the way other things have come back. I truly do wonder that. I mean, I probably shouldn't bet against it because everything else has been opening up pretty nicely. But will people still be willing to get into cars with strangers? That's still the big one for me, and I don't know about that. Either way, it's smart for Uber to diversify a little bit. One of the ways they were diversifying, aside from Uber Eats and trying to buy Grubhub, and that didn't work out, was with a credit card. Uber had a credit card, and they wanted to get into financing. And here's the thing, this is not unusual. Most companies have a credit card. Like, I was shocked, absolutely shocked, and I don't know why I was shocked. When I went to buy something from GameStop, and they asked, do you want to sign up for a GameStop credit card? And it was like, a what? GameStop has a credit card? Why would GameStop have the credit card? But then Toys R Us had a credit card too. A lot of companies have a credit card. It's just the way it is. And so Uber has one too. Or they had one. Because for the time being, at least, you cannot apply for an Uber credit card. And here's what's going on. So, this post contains... Okay, that's a disclaimer. So anyway, if you're looking to apply for a specific card right now, don't be completely blindsided if it's temporarily unavailable. That's because credit card companies are trying to mitigate risk in the current economic environment. We are, after all, officially in a recession. You can now add the Uber Visa credit card onto the list of temporary card casualties. Over the weekend, A View from the Wing reported that the card disappeared from both the Barclays website as well as the Uber app. A Barclays spokesperson confirmed this, saying that the card was temporarily removed in light of current market conditions. However, there is no time frame for when the card will be open again for new applicants. The spokesperson also noted that, quote, existing card members can continue to use their cards with confidence. So if you already have an Uber credit card, it's not going to be taken away. You can still use it. Pretty typical. Beyond the Uber credit card, Chase has most notably removed card products from its website and changed approval procedures for small business applications. And TPG senior contributor Ethan Steinberg recently experienced these recent developments when he was rejected for a Chase Inc. business preferred credit card. So that's the story. This little beauty, this Uber credit card, you cannot get at the moment. And it makes perfect sense. We are, as mentioned, in a recession. And what happens when you're in a recession? Well, if you're in a recession, usually it's because you usually lose your job or work is sometimes slower. And your expenses typically stay the same. I mean, look, we talked about this in our live streams. It's not like landlords are all of a sudden becoming reasonable, like, hey, we know like the shop is closed and we have to close the mall and this business isn't going to be making any money. So, we're going to like cut you a break on the rent and, we're going to work on something for when we reopen. No. Landlords are still like, pay me my money. The electric company, pay me my money. I'd quote Goodfellas here because there's that memorable scene where Ray Liotta's like, F you, pay me my money, but, I want to keep it family friendly for the most part. So, one of the things people tend to do is they tend to sign up for credit cards. because they're losing their jobs or their work is slowing down, but their expenses have stayed the same. In some cases, they've gotten higher because of one thing or another. Maybe someone actually did get sick with this thing and they had to have some new hospital bills. So they sign up for credit cards to pay their bills. And so what these companies do is they temporarily stop offering the cards because at this point, everyone becomes a high risk. You don't know who is signing up for a credit card that will be able to pay it back. All of a sudden, the FICO score doesn't mean as much as it used to. Yeah, you can have a good FICO score, but what if you lost your job and you don't disclose that? Well, guess what? That means it's going to be a lot harder to pay that credit card. What if you still have your job? Well, you might be losing hours and there's other expenses. And that could make it so that paying off that credit card might not be so easy. And here's the thing. Credit card companies do like this. They like it because they like to charge you interest. But under these circumstances, it's very easy for someone to get a credit card, rack up the debt, and then just simply never be able to pay it off and file for bankruptcy. And credit card companies would like to avoid that as much as possible. So I am not surprised that the Uber credit card, the Uber Visa credit card actually is what it's officially called, is temporarily not available. And it's basically a collector's item at this point because I don't think it's going to come back anytime soon. Now, if the economy starts to recover in a significant way in the next 3 months, and if the unemployment goes down, then you might start seeing the Uber credit card come back. And I think Uber would like to bring this back sooner rather than later because, again, their rideshare business is not doing very well. So, and as Jim points out that, yeah, it gives you rewards and Uber credits. You can use it for rides and Uber Eats. It's, and if you already have that card, it's not going anywhere. Breathe a sigh of relief. You get to keep using it, and provided you pay it off, of course. I mean, if you don't pay it off, then who knows what will happen at that point. But yeah, if you are new and you want an Uber credit card, and I don't even know if that's really a huge market right now. Some people are probably watching this and wondering, Uber has a credit card? Some of you might not even know they have it. But yes, they do, and it is temporarily not available. But with that said, what do you think about that story? Are you upset that the card is not available anymore? Did you want an Uber credit card? If you have one, how often do you use it? And what rewards do you typically get? I would love to know. So, you know the drill. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one. Now then, got 2 more topics. Talking a lot gets pretty hard. 2 more topics, and then we will answer questions in the live chat. So if you have any questions or similar comments, feel free to leave them. And hey, if you haven't given the video a thumbs up yet, feel free to do so. But with that out of the way, let's get on to the 4th main topic. And the 4th main topic involves movie theaters. And I think we've talked about movie theaters several times on live streams. I haven't done too many individual videos. I normally post that topic on the Failed Journalist channel, so feel free to check out that channel and subscribe if you have not already. But we're going to make it part of this show, and then I will break this up into that for that channel. When I've been doing some late live streams, one of the things that I mentioned that I miss most since the lockdowns have been movie theaters. Because whether you know it or not, I go to the movies like 2 to 3 times a week usually, on top of the stuff that I stream and watch on disc. I love movies. Movies is far and away my passion. And if I was a better film critic, I'd probably make more videos about movies. But I'm not a very good film critic. So, I rant about technology because, any fat kid can do that, right? But during some of these live streams, people kept mentioning, like, movie theaters are dead. Like, this lockdown is going to kill them. Like, they're not coming back. And I felt that was not true for a couple of reasons. First of all, drive-in theaters actually started doing really well during the lockdown. So clearly people still want to go out to the movies. But the other thing is, yeah, things are being shut down right now because we have to. But when it reopens, people will want to go back and do these things. I mean, sports is being shut down. No one was saying sports was never going to come back. What about theme parks? Apparently the theme parks are doing very well right now. And the restaurants, people are going back out to eat, even though in many ways it's still safer to eat at home. So I believe that people would be going back to the theaters. And now we have an official date of when the theaters will be, well, most of the theaters today should be reopening. Because Regal and Cinemark, and to a lesser extent AMC, have all announced they are reopening. Now then, when you come to this article, Cineworld Group, the owner of Regal Cinemas, will begin reopening movie theaters next week following a 3-month shutdown due to the C-virus pandemic. The company said in a statement Tuesday that it was planning to open all of its theaters by July 10th with screenings of Mulan, Wonder Woman 1984, and director Christopher Nolan's new film Tenet on the upcoming slate. And here's what's more. Cinemark is actually going to start opening their theaters in a few days, starting June 19th, and they will have a 4-phase reopening for the U.S. Now then, here's how the rollout is going to work. As laid out by CEO Mark Zoradi, the first phase of the plan is expected to kick in on Friday, June 19th. That weekend will see a test phase where 5 theaters in the Dallas-Fort Worth area will reopen. The following weekend, approximately a third of Cinemark's theaters, specifically those in larger markets, will reopen, while Phase 3 of the following week will see an additional third open their doors. Under the plan, Phase 4 will kick into effect the weekend of July 10th, with all of Cinemark's locations, numbering about 344, open by that date. Now, what's interesting about all this is that they're highlighting Mulan and Tennant, but the movie that's going to be opening, let me see if I can't find it, on June 10th, like this is the real movie that we're opening for, or that's opening July 10th, I'm sorry, is Unhinged with Russell Crowe. This is scheduled to be released July 10th, so there will be a new movie in theaters, and this is why they're all pushing for July 10th. Now, they have just mentioned that there's going to be like a bunch of older movies in theaters. Like if it's a new movie, it's going to be like a regular price ticket. But if it's an older movie, like it's Gladiator or Braveheart or Saving Private Ryan, I can hope. I've never seen that in theaters, so I'd love to see that in theaters. Those are going to be like $5 movie tickets. Of course, it's also interesting how the theaters are differentiating in how they handle things. So, for example, Regal will be requiring masks and temperature checks. Cinemark, they are doing the temperature checks, not the masks. And AMC appears to be okay with the masks, but they're a little shaky on the temperature checks. I've talked about those in other videos. For that reason, I probably will not be going to a Cinemark anytime soon. But I still have their service, so, you know, they're going to probably get like a month or two of my subscription money without me using it, so yay for them, I suppose. The one company that was not super clear on their reopening plans was AMC. AMC simply said all their theaters will be open by July. Now, if I were a betting man, I would say July 10th, because again, Unhinged is coming out. So they would at least have some new movie available, and provided Disney doesn't get cold feet, Mulan will then open a week and a half later, which is certainly something that I assume a lot of people want to see. I want to see it in 40X. I don't know if 40X is still going to be a thing when this is over. I don't know if they're going to feel comfortable showing a movie with wind effects, if you know what I mean. But yeah, there you have it. The movie theaters are officially on track to open back up. And I know a lot of people were disappointed by Tenet being delayed, but for all we know, maybe Tenet is safe now. Maybe this is just a lot of people have discussed that one of the reasons Tenet got delayed just by 2 weeks is because they wanted to give the theaters more time to, get established, and with these plans, it definitely seems like that is the case. But now my question to you is this. Are you excited about the movie theaters reopening again? Are you going to go back to the movie theaters when they reopen? Or are you going to wait like a couple months before you do? I would love to know. Comment below. Like, favorite, share, subscribe. And as always, flame responsibly. Have a good one. And now, once I take one last sip, let's tackle our final topic today. And our final topic today is about Shopify. Now, we don't talk about e-commerce as much as we should. I think I'm going to start talking more about e-commerce because, honestly, e-commerce is a great thing to do to make additional money. I've been using e-commerce to make extra money for more than 10 years at this point. Some months it has been good enough where, honestly, if you could hold that momentum, it could be a full-time job. But then it eventually goes away, so I almost never have planned for e-commerce to be my number one source of income. And it's even starting to pick up a little bit now. Like, I've got over $1,000 in my various e-commerce sites from items I have sold because people are starting to buy things again. And one of the shops that I use is Shopify. And Shopify is truly your own little private business. You create an online store, you stock it with merchandise, you have your payment processors, and then you can use Shopify to sync your merchandise with other e-commerce sites out there. Now, originally, Amazon had partnered with Shopify, which was a big vote of confidence, and then they kind of went their separate ways. I don't know exactly what happened, although from what I understand, Shopify was really not happy with Walmart's draconian methods of how they, ran the company. And Shopify has a new partner that could definitely be a sticking point for Amazon because Walmart has partnered with Shopify. So here's the article from TechCrunch. Walmart this morning announced a new partnership with e-commerce shopping platform Shopify, now used by over 1 million businesses. The deal will open Walmart's marketplace to Shopify small business sellers with the goal of bringing 1,200 Shopify sellers to the marketplace this year. I think they will get significantly more than 1,200 because Shopify has a lot of people who set up shop there. The partnership will greatly expand the reach of the participating brands by placing them in front of Walmart Marketplace's 120 million monthly visitors. The partnership is a direct shot at Amazon, which today promises third-party sellers the ability to reach more than 300 million customers worldwide and even offers help with shipping, returns, and customer service by the way of fulfillment by Amazon. Walmart, meanwhile, has been steadily working to make its own marketplace a more competitive offering, which is true. In fact, one of the things that Walmart did fairly recently was they decided to shut down Jet because Jet was just a cumbersome site, and they decided to fold it into Walmart Marketplace and really make Walmart Marketplace their big thing. Because here's the thing, one of the dirty little secrets of Amazon is it's third-party sellers that drive most of the traffic to Amazon. Sure, people go to Amazon, they look up their items, but how often do you go to the main product and underneath the buy now button says buy it for this much, and it's like $5 or $10 cheaper. So you go there and you see someone selling it used and it's like new. That's what it says. We're like new. So you buy it, you save $5, you get the item, it is like new, and hey, you don't mind if it's going to save $5. Well, here's the thing. Amazon takes a portion of that sale. They typically don't have to store the merchandise, and then they get valuable data on what people are willing to pay for things. So the third-party sellers actually make up quite a bit of Amazon sales, and this also explains why eBay is frankly Amazon's biggest competitor. Because if you can't find it on Amazon, you're going to find it on eBay. because Amazon's a retail store. And if Amazon don't have it, other retail stores probably won't have it. So you got to go to the third-party person themselves and buy it on eBay. So Walmart wants some of that cheddar. They want some of that license to print cheddar that only a third-party marketplace can have. Now, they have had this marketplace for a while. I'm not going to say they haven't, but it's never been like a big player. So what this signals to me is that Walmart is ready to get serious. They are going to court the Shopify shoppers. And now, if you have a Shopify store and you have populated it with merchandise, you will now be able to sync it with the Walmart marketplace. All that merchandise goes straight to Walmart. It goes straight to the listings. And you now have 120 million additional people who are willing to buy. Now, this could have a downside in the sense that one of the downsides with Amazon third-party seller marketplace right now is that while you can still make a lot of money with it, and I should know, I've been making money off my Amazon marketplace, Amazon wants the benefit of having that sweet third-party seller cheddar without people realizing it's really a third party. Like it used to be where if you clicked on the seller, you could save that as a favorite seller and you can look at their store. You can't do that anymore. You can just look at the seller name and their feedback now, but you can't just easily look at their other items. They have made it pretty much impossible to form a personal relationship with that third-party seller. And that could be the same thing that happens with Walmart. That said, it might be a lot harder. I'll have to test it out when it becomes fully integrated, but I have no doubt that what's going to happen is, they're going to have like a third-party seller selling an item, and there's going to be like a note like through Shopify, and they will be able to go to that seller's Shopify store if they want. But most people probably won't. They'll just buy it from Walmart, and thus Walmart will get a cut of that sale. That's how I believe it's going to work. And look, I have to say, it's a brilliant move. It's a really brilliant move. Shopify is used by a heck of a lot more people than you realize. Now, and Shopify makes money. I mean, look, do you want to know how popular Shopify is or how valuable they are? Look at this. Look at their stock, $805.76. You go back a year, last year it was at $305. And if you go to 5 years, it started at $35. This is a crazy ride. This is an absolute crazy ride. So, they're doing really well. And they did it by making smart partnerships. They're continuing to make smart partnerships, and they're easy to use. Now, I don't have a referral link or anything like that, so if you want a Shopify store, you just have to make one. And full disclosure, Shopify isn't free. But that said, it's a really nice product, and it has a lot more value now that it's on Walmart. But the question remains now, what do you folks think about Shopify? Do any of you use Shopify? Do you have success with it? Did it not quite work out? I would love to know. So, comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one. And with that done, well, we've gone through all the topics today, folks. So let's see if we have any questions to answer. It frankly does not look like we have any questions. I do see George is here. Hi, George. And I see Gig Life is here. Thank you for joining us. And Jim, the, in my opinion, the true king of rideshare, Jim Farrell. Yeah, he is here. And so Desmond and Steven. So, the only real comments are coming from Jim, although I do appreciate everyone saying hi, by the way. And he says, this is interesting, but I've owned an Uber credit card for over 5 years now. I use it exclusively when I drive, and it gives me rewards and Uber credits I can use for rides or for eats. And okay, so that's pretty much what the Uber credit card does. It will, the Uber credit card basically benefits Uber. Well, if you use a lot of Uber Eats and stuff, it's probably good. In fact, considering what's going on in the world right now, it was probably very beneficial to have an Uber credit card, which you were going to use on Uber Eats, which you probably got triple points because you use it for Uber product, and thus you got triple, quadruple points for Uber Eats, which means you probably get a few free meals. And then if Popeyes ends up giving you the 3 chicken tender combo as opposed to the 5-piece that you ordered, well, you get a free meal out of it. So, yeah, it'll be interesting. Like, when it comes back, it'll be nice. So, and then he also said, after the C virus, who has money for credit? Well, and that's the whole point. That's why the credit card was taken away for a little while, and why a lot of banks are discontinuing credit, because a lot of people don't have credit right now. So they can't really, it's really not a good idea to give it out. So, that's what that was all for. So anyway, it appears that is all the comments we have at the moment. We still have 14 people watching, but, so hey, to those 14 people, we have one more question from Muhammad Syed. Can we apply for unemployment now still as an Uber driver? I don't think so. I mean, you could try, but that ended up being like a really, really, really big hassle. Although, let me look something up real quick. There is, maybe we'll do like one more quick little topic, because I hear about the Uber unemployment thing come up quite a bit, and people ask like, when am I going to get my unemployment benefits? How does that work? Now, I don't know exactly how it works because I'm not going to apply for unemployment as an Uber driver. But this article from Bent Corner, this is a personal blog from Rick Rotman, kind of gives you some clues on what to expect when you apply for unemployment for Uber. And here's the thing. He starts by saying, "My personal nightmare is over. I awoke yesterday to find that my Maryland unemployment benefits in my bank account. Part of me didn't believe it would ever happen. I submitted my initial claim on April 25th, almost a month after the CARES Act was signed into law. If it wasn't for the CARES Act, gig workers and self-employed people like me would not have been able to file for unemployment benefits. Then it took another 26 days for the funds to get deposited into my account." So this gentleman's from Maryland, and all your unemployment, it's going to be different from state to state. That's just how it is. But if I'm reading this correctly, he submitted his initial claim on April 25th, almost a month after the CARES Act was signed into law. And if I recall, I think he was still driving for Uber a little bit before he decided he couldn't take that risk anymore. And then it took 26 days to get the funds deposited into the account. So it's not a fast process. Here's something to kind of keep in mind, though. You want to keep in mind that they're not giving it to just anyone. I mean, there's still some pretty strict requirements they have, and I don't completely know what those requirements are. Here's the other thing. The unemployment, which has been very, very generous from everything I've heard, frankly, it's not going to last much longer, because the CARES Act and the extra $600 a week that you get only lasts through the end of July. And since gig workers typically do not get unemployment benefits, I'm thinking that once the CARES Act expires, then so too will the unemployment benefits. I don't know for sure, but I'm pretty certain that the gig workers being covered for unemployment is a very, very temporary thing. There are channels that do explain this in much more detail than I ever have. Now, personal opinion, whether you qualify or not, just apply. I mean, the worst they can say is no, right? I mean, you might not get anything, but you won't know until you try. But it probably won't be much. or it might only be for a couple of weeks at this point. Because again, I think the gig workers were specifically part of the CARES Act, and that does expire in July. So I'm frankly a little surprised you didn't apply sooner. But hey, there's still time. Apply anyway. If they say no, they say no. But they might say yes. You never, ever know. So good luck with you on that one, though. I hope they can take care of you. And Jim says, oh, yes. Yeah, actually, Jim agrees. Yes, always apply. The worst I can say is no. The extra $600 is good through the end of July. Oh, through the end of July. Okay, I thought at the beginning of July is when it ended. Apparently, that's not the case. It'll be through the end of July. So, yeah, no. If the CARES Act is going to act through the end of July, it's definitely worth trying to apply. Oh, and you also applied and got the PPP loan as well. You know, I almost discussed Uber drivers getting the PPP loan today, but I'm probably going to have to save that for tomorrow's episode. And hey, Ryan, how are you doing? So, anyway, Craig says, I made almost 5 times my money back on Hertz. I bought $5,000 worth of stock when it was $1.03 and sold it all at $4.85. And that is a good way to do it. That was extremely risky, but I'm glad that you worked that out. Yeah, you definitely made your money back on that one. So, but is it worth getting into Hertz stock now? Probably not. Like, I just sold my Hertz stock. Now, if it gets below $1 again, who knows? $100, that's definitely gambling money. I might just try it, but I don't think it's going to recover this time. Especially with them issuing all the new shares, I think it's pretty clear that Hertz stock is going to go to zero. But I'm glad you sold it at $4.85. And the sad thing was, I remember when it got to like less than $1, and I seriously considered buying some Hertz, and I ultimately said, nah. And then it got up to $5, and it's like, oh, it seems to be recovering, so I'll buy 15 shares, and then it tanked. I mean, that was just ultimately bad timing all around. Yeah, I'm doing okay, Ryan. I think I'm doing okay. Well, anyway, folks, that's, I guess, where we are going to end today's episode of the Apptrepreneur Show. Remember, we are doing the Apptrepreneur Show on a daily basis, and if you missed any topics today, we will be cutting them out into their own sections and dispersing them onto this channel, The Failed Journalist, and the Apptrepreneur Vlogs tomorrow morning. And I hope to see you again tomorrow at around 4 p.m. again, California time. So hopefully I'll see you tomorrow. Enjoy. And hey, if you have any topics you might be interested in having discussed, feel free to shoot me an email. Until then, flame responsibly. Take care of yourselves.